Hey, welcome back to YT Finance, and today we are going to be talking about Workhorse stock and how the presidential election between Donald Trump and Joe Biden will affect the stock market and WKHS stock. We will talk about the risks of this election for the stock market, then we will talk about both candidates' tax plans, and lastly, we will go over their plans for the market and overall economy. Remember to like this video right now, subscribe if you are new, if you are already subscribed, you are the best, and comment down below what you think will happen to Workhorse stock during this election. And without further ado, let's jump into our first article. In case you didn't know, Workhorse is a startup electric vehicle company that has drone technology in the last mile delivery sector, and they have the potential to obtain a portion of a billion-dollar contract with the United States Postal Service, which would cause the stock price to explode. But currently, Workhorse stock has weak fundamentals and financial performance, which makes this a speculative investment with very high reward. Now that you are caught up, Workhorse stock, ticker symbol WKHS, has risen and fallen 30% two separate times, making a W shape. And although Workhorse stock moves to higher highs on good news, it also crashes on the bad news, which could come from the winner of this presidential election. Workhorse stock has rallied 90% in September and then lost most of its momentum, just to rise again to fall right back down. This is because volatile electric vehicle stocks like Tesla, TSLA stock, NIO, and IO stock, Lordstown Motors, RIDE stock, Spang, XPEV stock, Hyliion, HYLN stock, and even General Motors GM stock has released an electric Hummer. These EV stocks are shooting for the stars to follow in Tesla's footsteps, and Workhorse wants to be the one that actually does in its respected last mile delivery sector. Now, Workhorse Group does not have solid financials or fundamentals, which means that traders are free to move the stock price aggressively because there is nothing tangible for the price to stick to, which makes WKHS stock swing harshly because of either good or bad news. Luckily, we do have a support line that I talked about last video, but beyond that, we know that most likely the stock will not drop below that because the stock would become so cheap that other investors would want to buy it, thus keeping it above that price range. But hopefully we can get a really good catalyst from the USPS contract so it shoots up into higher highs. Full-time day traders, swing traders, and momentum traders like to purchase stocks like Workhorse at a high price so they can sell it at a higher price later. But to do this efficiently and effectively, you would need to be watching the charts 24/7, which we don't have time for. Instead, we as retail investors should aim for an entry point that minimizes our risk, which would be below the $20 mark. If your average price is above $20 for WKHS stock, you could consider lessening your position and using that money to diversify your portfolio to be more risk resistant, so even if things go south for Workhorse stock, you could do some damage control. Remember that the stock right now is rated as a hold for almost all analysts, so it might be best to sit tight for now until the USPS contract winners are announced. Now, this $20 resistance zone is not a hard rule, and if you are above it, that does not mean you are all in trouble, and if you are below it, it also does not mean that you are safe. I am just letting you all know this as something to be aware of. The bears have clearly done some damage to WKHS stock, but it's not out for the count yet. Now, I am no options trader, but it does give you a unique advantage because in some options trades, you do not need Workhorse stock to rally to make a profit. Just make sure you know what you are doing, and if you are new to options trading, do not start it with Workhorse stock. Educate yourself as much as possible, and please start with little stocks like penny stocks. Another thing to keep in mind is that we cannot simply judge Workhorse based upon Workhorse Group's fundamentals or by traditional metrics like financials, because Workhorse is a startup company, which makes it very speculative. So if you don't have Webull or another brokerage that allows stop losses, please get a brokerage where you can activate a stop loss, so if Workhorse drops too much, it automatically pulls your money out of Workhorse. This is going to save you a lot of risk. Not only is Workhorse a very high risk, high reward stock, it also has outside environmental risks from politicians, the presidential campaigns and how they view green energy, and even the lack of stimulus, which is a great segue into our next topic, which is about Donald Trump and Joe Biden's debate and presidential election coming up. So which candidate will grow the stock market the best and grow Workhorse Group the fastest? Well, David Kelly from JP Morgan said that the stock market hates uncertainty, and of course the election is the ultimate uncertainty. So let's take a look at some data about election years. Historically, the market shows weaker performance in election years, and if we put a pandemic on top of that, bam, investors get screwed. This aligns with the statistics of the US Bank, which says that the market grows less than 6% during an election year, compared with 8.5% for any other year on average. So even before presidential elections, the market still trends upward and are positive. They are just less positive than the usual years. But what happens after an election? Well, after an election, the statistics can get complicated because it depends on the party in power, how well previously economic policies have performed, if these policies will be changed with the exchange of power, or if the current president remains in office. To prevent this, we will be using averages and generalizations to not give cold hard data, but simply to show an emerging pattern which should not be taken as a fact. On average, the stock market tends to not perform as well as normal in the years following a presidential election. JP Morgan has found that in the short term, a Republican president can have the stock market recover faster, while a Democratic president can make it positive over a long-run term. The stock market over a term increases about 5% when a new party enters into power, when if a current president remains in office, the market sees a 6.5% increase, which reinforces the quote that we read in the beginning, which basically says that if a president remains in power, there is less uncertainty in the market, which gives confidence to investors. Here is a second quote by a finance professor from the University of Pennsylvania, which says, "The second term of a president is typically going to continue the policies of the previous presidency. There is less uncertainty for the markets to process, and therefore that might contribute to higher valuations during the second term." The article adds, however, in the long term, on average, a Democratic president beats out a Republican president for long-term growth. Basically, on average, a Republican president is better at having the stock market recover quickly in the short term, while a Democratic president is better at maintaining a long-term momentum for the stock market. The article goes on to add that whoever controls Congress does not hinder the equity performance, but historically the market performs better with a divided Congress. Now, you can think of this what you will. I just thought I would add this because I thought it was interesting that the article went there. But here are the main takeaways from this article. Number 1, the stock market shows weaker performance before a presidential election. Number 2, a Republican president is better for short-run market health, and a Democratic president is better at maintaining long-run momentum. Number 3, if a new party comes into power, the stock market only gains 5%, while if a party stays in power, the stock market rallies 6.5%. Number 4, historically, the stock market performs better under a divided Congress. Now let's talk about Biden's and Trump's tax plans. Let's start with former Vice President Joe Biden. For wealthy Americans in New York, New Jersey, California, and Hawaii, the federal tax rate will climb above 60%. And California already has outrageous taxes, which is one of the reasons why so many people are leaving California right now already. Also, the data coming from this article has been verified by the Tax Foundation. Currently, the tax rate for ordinary income is 37%, and former Vice President Biden would like to increase that to 39.6% for individuals who make over $400,000. On the flip side, President Trump would like to keep the current 37% rate and has even hinted at lowering the 22% for middle-income taxpayers down to 15%. So one is bad for individuals who make $400,000 or more, and the other is good for middle-income families. But remember, he has only hinted at this price cut in the tax rate. This should be taken with a grain of salt. But what about Workhorse stock? How does this impact my investments? Well, I'm glad you asked me that, Joseph. If your name was Joseph, I probably just scared the mess out of you right there. Anyway, let's talk about the capital gains rate, which is the tax you pay on dividends, and growth stocks once you realize the gains if they are not in a Roth IRA. If you hold your investments for over a year, you will be in the lower long-term capital gains rate tax of around 23%, which depends on other factors. And Trump has expressed lowering this to 15%, but remember, this was just him mentioning it. He needs to put pen to paper. On the other hand, Biden wants to tax people at a regular tax rate well above 23% if your tax or income is above $1 million. The reason why President Trump would want to lower this tax rate for investors is to diminish double taxation. When you bring home your wage, it is already taxed by the state and federal government, which is mandatory. And if you invest that money and take those funds out later, you will get taxed again at the capital gains rate. So you are taxed multiple times for the same money that was already taxed. If this is lowered, it would do great things for investors, which also means earlier retirements and more money. For this next part, I will quote from the article pertaining to payroll taxes, which says this. In an August 2020 presidential memorandum, Trump directed the U.S. Treasury to defer Social Security tax obligations of certain American workers for September through December 2020. If re-elected, Trump would like to eliminate these deferred taxes by providing a temporary payroll tax holiday. Biden would like to expand the Social Security tax by applying it to wages greater than $400,000. But what about corporate tax rates, and why should we care? Well, C corporations see a flat tax rate of 21%, and Trump would like to lower that tax rate by 1% to a solid 20% tax rate for corporations. Biden, however, would like to raise the corporate tax rate to 28%, and his running mate Kamala Harris wants it to be raised to over 30%. This is very bad news for the stock market, because if corporations are taxed higher, then that leaves less money for them to open up new stores, which equals less job positions, less money to buy materials, and most importantly for us, less money to reinvest in their company to grow the stock's price. And it could cause them to leave America and take all the jobs with them, which could lead to an economic depression. However, both presidential candidates are on the side of green energy, Biden being more so because of the Paris Agreement. So either one would likely back Workhorse, especially since President Donald Trump and Vice President Mike Pence endorsed Lordstown Motors, who is closely related to Workhorse, who has also gone public today thanks to the merger with Diamond Peak Holdings, DPHC stock, to be traded under the new ticker symbol RIDE, R-I-D-E. In closing, neither President Donald Trump or former Vice President Joe Biden has a comprehensive tax plan set up. Overall, Biden's plan promotes equitable treatment, which means taxing the millionaires, while Trump focuses on encouraging economic growth and innovation. When you vote, do what you think is best for you and the people you love. I know I could have not possibly done justice to both these presidential candidates, so I would urge you to read their completed plans in articles that are linked below. Some articles leaned way too far to the right and other articles leaned way too far to the left, but this last tax article did a great job at being facts and numbers focused. That's all I have for you all today. Leave a like, comment, and subscribe, and I'll see you in the next YT video.